$44.8 billion for spices. I'm telling you, the Unilever McCormick deal is an absolute masterclass in portfolio defense.
Masterclass. They're just dumping their slow-growth mayo division onto the spice rack and praying the market calls it synergy.
Hey, mayo needs black pepper. It's a strategic pairing.
It's a $44 billion distraction. But speaking of expensive pivots, Ecolab just dropped almost $5 billion on liquid cooling.
The data center land grab is getting completely wild. The rundown. $7.8 billion from Eli Lilly for Centessa, and another $5.6 billion from Biogen for Apellis. Big Pharma is just opening the checkbook this week.
They have to. The patent cliffs are coming and they're desperate. But that Biogen multiple for Apellis? I read the filing this morning. They're paying a massive premium for a pipeline that still has huge regulatory risk attached to it.
Oh, come on, Maya. It's a calculated bet. Biogen needs the healthcare portfolio boost. Sometimes you overpay for the asset because the cost of doing nothing is worse.
Spoken like a true banker trying to justify his advisory fee, the math absolutely doesn't work unless every single phase 3 trial hits perfectly.
Hey, I'm reformed, okay? I'll admit the multiple is aggressive. But speaking of aggressive, how about the data center land grab? Ecolab dropping $4.75 billion on CoolIT Systems.
Now that's a deal I actually like. Liquid cooling is the bottleneck for all this AI infrastructure. Everyone's worried about the AI SaaS apocalypse wiping out horizontal software, but the picks and shovels, the physical hardware, that's where the real money is hiding.
Wait, real quick, did you see the vertical SaaS founders gloating right now? They're totally defying the SaaS apocalypse. Valuations are through the roof for niche software, while the broad platform guys are terrified.
Because niche actually has defensible data moats. But back to the hardware play. Legrand is doing the exact same thing as Ecolab. They just bought Kedak in China and TES in Europe, just doubling down on data center infrastructure globally.
It's a massive global play. Though I wonder how much the cross-border stuff gets squeezed if Middle East tensions keep pushing energy prices up. Dealmakers are optimistic for 2026, but that's the big wild card right now.
There's always a wild card. Speaking of wild cards, I heard a ridiculous rumor this morning. Danone is reportedly circling Huel.
Wait, really? The bro powder meal replacement guys?
Yep, a potential $1 billion buyout. French food royalty buying tech bro protein sludge. I can't wait to read the synergy slides on that pitch deck.
The culture clash alone is worth $1 billion. I'd pay to sit in on that post-merger integration meeting. But if you want to talk about massive food deals actually happening, we need to talk about the absolute monster that just dropped.
$44.8 billion.
Unilever and McCormick. The spice rack is getting a massive makeover. How did they even structure this flavor bomb? The big one. $44.8 billion for mayo and spices. I just want to sit with that number for a second.
It's staggering. But look at the press release. Unilever is calling it a combination of equals in the food space. But if you read the actual structure, this is Unilever paying a massive premium to staple McCormick to a legacy food division that's barely treading water.
Okay, but you have to admit the strategic logic is beautiful. You take Unilever's massive global supply chain and you push McCormick's high-margin spices through it. Think about the emerging markets. It's a textbook growth play.
Textbook for 1998, maybe. Nate, Unilever's food volume growth has been flat for quarters. They aren't buying distribution synergy. They're buying a growth engine to hide the fact that their own pantry is completely bare.
That's incredibly harsh on the folks making Nor Bouillon cubes.
I'm just looking at the math. Financing conditions finally loosen up a bit here in early 2026, and the first thing Unilever's board does is write a check for almost $45 billion. It smells like panic.
It smells like garlic powder and profit. I'm telling you, the debt markets are wide open right now. Boards are finally shaking off the geopolitical jitters. We're seeing real confidence again.
Until energy prices spike. You know dealmakers are completely ignoring the Middle East tension right now. Cross-border financing could tighten up tomorrow if oil jumps. A $44 billion mega deal leaves zero room for error if the macro environment flips.
Fair point, but right now cash is moving, and consumer goods are suddenly hot again. Did you see the rumor about Danone?
The Huel thing?
Yes, French food giant Danone is reportedly circling Huel for $1 billion. $1 billion for liquid tech bro meals.
I actually drank Huel when I was covering the valley. It tastes like dusty oatmeal. But $1 billion makes sense. The margins on direct-to-consumer protein are wild.
It just proves people still need to eat. While all the horizontal software developers are terrified of the AI SaaS apocalypse, the food guys are quietly printing money.
Actually, the niche vertical SaaS founders are doing just fine. They're commanding massive premiums right now. But you know who's making the real money off the AI boom? Not software, hardware infrastructure.
The cooling guys.
Exactly. Ecolab just dropped $4.75 billion for CoolIT Systems, liquid cooling for servers.
Which brings us perfectly to the other massive trend this week. Legrand buying up data center infrastructure in Europe and China. It's an absolute land grab out there. Voices. I am officially obsessed with the phrase AI SaaS apocalypse.
It sounds like a bad sci-fi channel movie from 2009.
Right? But the commentators are eating it up. The consensus this week is that horizontal software is dead, but vertical SaaS is somehow defying this apocalypse and commanding massive premiums.
I read those same reports. And honestly, I think the narrative is totally overblown. You look at the actual multiples, and sure, niche software is doing okay. But calling it a premium valuation just because your revenue isn't actively collapsing is a huge stretch.
Oh, come on, Maya. The founders are quietly popping champagne right now. If you build software specifically for, I don't know, a left-handed dentist, private equity is throwing term sheets at you. The commentary is spot on. PE firms are desperate for these public-to-private transactions right now.
Well, yeah, because they want to hide. They're taking them private to do the dirty work of slashing costs without having to explain their margins on a quarterly earnings call.
Exactly. That's the banker playbook. You take it out of the public spotlight, fix the engine, and unlock the value. And the premium for niche products is real everywhere right now, not just in software. Look at the rumor mill. Word is Danone is circling Huel for $1 billion.
Wait, really? $1 billion for tech bro meal sludge?
Hey, I lived on that sludge during my analyst years. Don't knock the liquid meal.
I will absolutely knock it. $1 billion for powdered oats is peak late cycle behavior, especially when every serious analyst is warning that Middle East tensions and energy spikes could freeze cross-border deals entirely this year.
True, the macro picture is getting messy, but people still need to eat or, drink their beige nutrients.
I guess we'll see if the regulators have an appetite for any of this. Speaking of indigestion, tomorrow we're pulling the filings on a massive wave of pharma deals heading straight for the antitrust wall. Spill the tea.
Okay, but picture the Danone executive suite right now. They're looking at their yogurt empire and thinking, you know what we need? Tech bro gruel.
You mean Huel? And yes, the rumor mill says Danone is circling them for a $1 billion buyout. $1 billion. For powdered food.
It's not just powdered food, Maya. It's a lifestyle brand for people who think chewing is an inefficient use of their time.
Honestly, I respect the grift. But $1 billion? I need to see the revenue multiple on that because there's no way the math works. Danone is a legacy food giant. They buy Activia. They buy Evian. Buying Huel feels like a corporate midlife crisis.
See, I completely disagree. It's a brilliant hedge. You've got this whole generation of consumers shifting away from traditional meals. Danone knows dairy is plateauing. They're buying a direct-to-consumer machine.
A machine that sells beige sludge. I'll believe that $1 billion price tag when I see a signed term sheet.
Spoken like a true skeptic. But hey, at least the Huel founders are happy, unlike the horizontal SaaS guys right now.
Oh, the AI SaaS apocalypse.
Exactly. Everyone was terrified AI would wipe out software valuations. But if you look at the niche vertical SaaS founders, they're quietly popping champagne.
Because they actually solve specific problems. A generic workflow tool is dead meat against AI, but software built specifically for, say, dental office billing, premium valuation, private equity is eating those up right now, taking them public to private just to avoid market scrutiny.
It's the ultimate revenge of the unsexy business model. Which, speaking of unsexy but highly profitable, we need to talk about what's happening in healthcare tomorrow.
Oh, absolutely. Regulators are sharpening their knives for that wave of multi-billion-dollar pharma deals. Gilead's $2.2 billion play for Uro, Novartis dropping $2 billion for a breast cancer drug.
We're tracking all the filings tonight. We'll have the breakdown on whether those deals actually survive Washington tomorrow morning. Tomorrow's radar. I'm telling you, if Danone actually drops $1 billion on Huel tomorrow, it is a brilliant narrative play. They're buying a lifestyle cult.
They're buying glorified drywall mix. $1 billion for liquid meal replacements. Oh, come on. Show me the unit economics before we call it brilliant.
It's the SaaS of food, Maya. High retention, recurring revenue.
You've been reading too many pitch decks. I'm ignoring the protein gossip tomorrow anyway. I'm hitting refresh on the SEC site for the Bank of Hope filings.
The SMBC Manubank carve-out.
Exactly. It's an all-cash deal for their commercial unit, and I need to see the exact financing structure hiding in the footnotes. No regional bank just has that kind of cash sitting in the sofa cushions.
Fair. Well, I'll be watching the healthcare tape. Gilead's $2.2 billion play for Uro Medicines heads into regulatory scrutiny tomorrow, along with that $2 billion Novartis breast cancer deal.
The FTC has been sharpening its knives for pharma roll-ups all year.
We'll see who survives the buzzsaw. Catch you tomorrow.